This is the Practice of Therapy podcast with Gordon Brewer. This is session number 55 of the Practice of Therapy podcast. Hello, folks. I'm Gordon Brewer. So glad you have joined me for the podcast. If this is your first time listening to the podcast, welcome. I'm glad you found us and hope you'll stick around and subscribe and also go over and give us a rating wherever you might be listening and leave a review. I'd appreciate that. So hope this information is going to be helpful for you today. I'm going to change gears a little bit today. Don't have anybody specifically that I'm interviewing, but wanted to shift gears today for this episode. And so just talk with you a little bit about what I've been up to and what's been on my mind with some things that are related to private practice and particularly around this financial course I'm putting together. I wanted to tell you a little bit about that, maybe introduce some concepts and ideas for you with that. But before we get started with that, one of the things that's just been on my mind today is it is absolutely gorgeous here in East Tennessee. Fall has finally come, and it is so great to finally be in some fall weather. You know, it's been in the 80s and 90s up until the middle of October this year. Just weird stuff weather-wise. For those naysayers about global warming, you better wake up because it's here. But anyway, it's finally, I think the heat wave is finally over, and hopefully we're over with all the storms. The folks that have hit by Hurricane Michael and Hurricane Florence, my thoughts and prayers go out to you if any of you listening have been affected by that. It's tough to watch on the news, and I know some of my family over in North Carolina have been they're okay. They're nothing major with them, but it's been something that they've had a double whammy here lately with all the rain and all the winds and stuff. And so anyway, that was on my mind today, and just needed to mention that. Another thing I wanted to make an announcement about is I'm going to be involved in something pretty cool that's coming up. So mark your calendars for this time next year. Joe Sanok from the Practice of the Practice has invited me to be part of what he's calling the Killin camp. And I'm going to try to pull up here while I'm talking the website so I can tell you a little more about it. But basically what it is it's just going to be a great conference with a bunch of private practice influencers and people that are involved in private practice. A lot of people that you have heard here on this podcast already are going to be involved. We've got Katie Englert from last week's podcast episode will be there and be leading a workshop. Let's see, who else here? Let me scroll down and see who all he's got. We've got Tara Vossen-Kemper that is going to be there. Cecilia Brisno, she's been on this podcast. Amanda Patterson, who's a social media guru. Allison Pigeon, who's been on the podcast. Also, Katie, as I mentioned. Dr. Megan Warner, who's a good friend of mine from some of the mastermind groups I'm involved in. I need to get in touch with Megan to get her on the podcast here because she's a lot of fun and a great person to talk to. But anyway, mark your calendars and you can go to the website. It's just simply Killin, KILLINIT camp.com, and that will get you the information, and you can go ahead and register. It's going to be held in Estes Park, Colorado. So great time of the year to be in Colorado, and you can go over there and see some leaves and that sort of thing. But anyway, the early bird registration ends in January. So ends in April of 2019. I don't know that Joe's promoting this much, but anyway, mark your calendars, and tickets will go on sale January 1st. So go over and check that out. It's going to be a great conference, just knowing all those people. And, of course, Joe Sanok will be there for those of you that maybe follow Joe over at the Practice of the Practice. And he's been a great friend and mentor to me along the way. So, so today let's jump into talking about some of the financial side of private practice. And in particular, I want to kind of walk you through a process of kind of analyzing where you are in your practice financially and give you some tips on how I do that. One other thing I wanted to mention is I am putting together a financial analysis guide that's going to be a free download. And by the time we get this podcast out, we should have the links to that. And don't have the URL for that yet, but I'll hopefully have that by the end of the program. So without further ado, let's jump into the financial side of private practice. You know, as I say so many times, the place to start with anything is with the question why. And I wanted to give you a little bit of insight into, or just to tell you a little bit about why I'm doing this focus on the financial side of private practice and talking about money. So many times I hear stories from people and just talking with people across the country. The frustration I hear them and the angst that I hear them going through in their practices generally comes down to, when you peel back all the layers, it comes down to worries about money and about how they're going to be able to pay the bills either at home or with their practice. Are they going to be able to make enough money to sustain themselves in the lifestyle they want to keep, and also just in their practice in general? And unfortunately, there are so many private practices that fail for these reasons and a few others. But the number one reason that a private practice will fail is because they haven't prepared themselves financially for it, and they haven't really put the systems in place to understand how business works and understand just the whole financial money side of private practice. So today what I'd like to do is just kind of walk you through a process of knowing how to analyze what you have, and also being able to understand where you can make some changes and what you need to do in order to grow your practice. You know, when it comes down to it, when you think about just some basic math and basic finances, for a private practice, we have to have the clients to see, and that's where that whole marketing piece comes in terms of making sure that we're getting the number of referrals we need for our practices. Because obviously, if we're not seeing clients, we're not going to be able to make any money. We've got to have those clients coming through the door in order for us to see them. The other side of it too, that's the revenue side. That's where the primary place in which most private practices make their money is with that, that trading time for money, seeing clients. And particularly for those people that are in the beginning stages of private practice, maybe they're just not just in, because it's a very valuable, I don't want to say it that way. They are in a solo private practice where they're the only person, and they might have an admin person that's helping them, but primarily they're the only person that makes up the practice. They depend on seeing clients. And so many times too, one of the things that I see that what happens with people is that they, when they start to grow, they end up taking on more and more clients, and they really create a caseload that's not manageable for them. In other words, they're seeing too many clients. Sure, they're making the money from that, but they end up burning the candle at both ends. So you've got that piece of bringing in clients, getting the referrals you need, and making sure that that is a steady flow as well. The other side of it is, of course, the expense side. That's the revenue side. The expense side is what it costs you to maintain your practice. Now, for the most part, the good news is that it doesn't take a whole lot. We don't necessarily have to have a whole lot of overhead to maintain the service-based business like we have in private practice. We are able to, essentially you just need a private place to meet with clients. You might need computer, internet, phone, and that's basically it. Some furniture that's comfortable to sit in, and hopefully, it's in your office is in a place that's easily accessible, and privacy is important as well. But anyway, that's basically what we need. I mean, we don't have to worry about things like inventory or keeping products on hand or anything like that a lot of small businesses have to deal with. But we do have to keep that office space up. We have to pay, of course, in one form or fashion, have to pay to keep the lights on, have to pay to make sure the phones are working and air conditioning's running and all those kinds of things that go into the cost of operating your business. The other part of operating the business, of course, is, maintaining a website, which is really a must in this day and time in terms of having that out there to for people to find you and being able to look you up online and be able to maybe make appointments online, all of those kinds of things. Also being able to have things like electronic health record systems, whether you're using something like Therapy Notes, Therapy Appointment, Simple Practice, Theranest. I'm just thinking of some of the different ones off the top of your head. That's not a huge expense, but it is an expense every month. And then if you're in a group practice or have a group practice, you've got to be able to pay your the people that are working with you, whether they be contractors or employees. So all of those things go into figuring out what your operating expenses are. The other factor that we have to take into consideration in private practice is what is it that we can reasonably get for our fees? In other words, when people come to see us, what do they pay us for our time and expertise? There's a lot of talk around that, depending on not a lot of talk, but just a lot of ideas around that, depending on which model you are following in terms of your business model. For some of us, myself included, we are insurance based. And as you've heard me talk about in previous episodes, the reason I decided to accept insurance and be on insurance panels was primarily because the demographics of the area I live in pretty much demands it. It would be I'm not saying it's not possible, but it'd be very difficult to get the clients I need, and it would be a constant uphill battle to get the kind of clients that I want to work with and be able to have those steady referral sources. So being on insurance panels helps kind of take care of that because the demographics of my area, I live in an area that's kind of lower to middle class people. We've got a lot of rural area around us. We're located in the Appalachian region of the state. And so the demographics here, there's higher rates of poverty around us out in the counties and then, out in, as we like to call it, out in the hollers. And so those people that need our services, that want our services, depend on their insurance in order to pay for those things. So in that sense, I had to kind of go through that process to decide to be on insurance panels. So that affects the fees that we get. Now, for those of you that are insurance based, especially those of you that are on insurance panels, one of the things that you quickly figure out is that you don't get paid the same thing from each insurance company. It varies depending on your contract. And so in thinking about the cost of operating, part of part of what you get from insurance companies and also being able to file claims adds to the cost of your operating. And so for insurance-based businesses, insurance-based practices, we really depend on the volume that insurance brings in order to create the revenue that we need for our practice. So in that sense, you've got to take in that into consideration in your calculations. For an insurance-based practice, you're probably going to have to see more clients in a week or in a month or whatever, how you're looking at that, than somebody that might be strictly private pay that has a higher fee that they're able to charge. So those are things that all go into figuring out what it costs to operate, also being able to look at your revenue streams. For private pay people, I wish I was in a place where I could really be solely private pay. It'd certainly be much simpler. But also, the thing about private pay is that a lot of times people will tend to look at what other people are charging in their area and maybe put themselves in the same range. Don't necessarily depend on what others are doing to set your rate. Certainly, you need to be competitive, but a lot of times I see people make the mistake of saying, well, I'm going to price myself lower, thinking that they're going to get more clients that way. There's probably not much of a correlation with that. People don't necessarily price shop when it comes to counselors and therapists. They really look do more shopping around what issues you're able to help with. So really the moral of that story is don't set your prices. Don't let your price, whatever your price is as a therapist for your session, don't think of that as a marketing tool. In other words, that's not what's going to attract people to your practice, your price. People just really people do care about price, but at the same time, very few times have I heard of people shopping around to find the least expensive therapist. And if those are the people that you're going to get to come to you, that's probably not your ideal client anyway. So I don't want to get off on a tangent on that, but that has a lot to do with why having a niche is so important. So the things that we need to think about when we're doing a financial analysis of our practice is we need to look at, obviously the number of clients that we're getting and what we can do to either increase or maybe even decrease that caseload. The other thing is what we are getting or what we're averaging per session. In other words, what do we get for our time, and having a clear understanding of that figure. Also, having a clear understanding of what it costs us per client to keep the doors open. Most of us, hopefully you're using some sort of accounting software or using something to track your income and expenses in your practice. But one of the things that's interesting to do is to break it down to what it costs per client, and also what your average per session rate is for your practice. And you can do a lot of analysis just around those, knowing those two figures. It can help you predict your cash flow. It can help you make plans for the future and really kind of develop a clear financial plan. Ultimately, I think too, when it comes to what we charge for sessions and our rates, probably it's a good idea to think about raising your rates periodically. I know I'm about due for a rate increase for my practice, and we'll probably do that come the first of the year. It doesn't necessarily, like I had mentioned earlier, with the insurance companies, those contract rates are fairly well fixed, although they do tend to up those when your contract ends, or hopefully they up those, but they're up for negotiation anyway. That's another little side tip here is don't just because a insurance company's gives you a certain rate doesn't mean you have to accept it, especially when your contract renews or you make a contract with an insurance company. Those rates are negotiable. They may or may not honor that depending on the number of other therapists they have on their panel and maybe what your specialties are, that sort of thing. But anyway, it's a good thing to keep in mind when you're thinking about renewing your insurance contracts, is to maybe have a conversation with somebody there about your rate, per session rate. So, okay, so I digress. Anyway, so the way I go about analyzing my my cost per session and my rate per session is really what I'm looking for is what is my, gross net profit. And what I mean by that is in traditional accounting terms, or in the traditional way of thinking about accounting, it's usually your income minus your expenses equals your profit. Now, talk about here in just a little bit about profit first and why that's so important to learn about that and why I think it's such a great thing to learn. But when you think about it on a per case basis, we've got what we get for a session, the total amount, and then if you know exactly what your cost per session is. Say, for example, let's just do use a simple example here. If I get $75 per session, or I tell you what, let's make it better than that. If I get $100 per session, and I know that it cost me $25 per client to keep the doors open, to do my advertising, to pay my admin staff, all of that sort of thing, then my gross profit on that particular case is $75. It's pretty simple math. And so that's what I get to keep for myself, to pay myself. Now, in this guide that I'm putting together, I'm going to talk some more and go into some more detail there about why this whole profit first concept and this whole profit first idea from Mike Michalowicz, I think, is so important. One of the mistakes that a lot of people make in private practice, and I think this is where they end up struggling, is that they make covering their expenses more of a priority than paying themselves or making a profit. And so the concept or the idea of profit first is exactly what it means. You put your profit first. In other words, when you get $100 from a client, there is going to be a percentage of that off the top that you designate to your profit. The second thing that you should be pulling off of that, off the top, is what you pay yourself. And then pay your expenses. And then pay your taxes. And if you use an allocation system like Profit First, every bit of that $100 that you receive from a client is, if we're just thinking about it in the micro, in a per case basis, every bit of that $100 you collect from that client is accounted for. In other words, you know where that money is going and what you're going to do with it. And so that's an important concept that I think it is to get your head around. In business finance, and particularly in private practice, is the revenue that comes in, the money that comes in, you know what you're going to do with every single penny of that, rather than letting it control you and trying to figure out what you're going to do with the money once it comes in, or once you have to spend it out, or that sort of thing. Now, hopefully this is making sense for you. So let's talk about profit first and allocations a little bit here. Funny story here I'll tell you real quickly is when our daughter was younger in grade school, one of the things that she it might have even been in kindergarten when they were learning about things like patterns. And she used to say it was a patron. And anyway, we have a family joke about that. But one of the funny things she did one time is she she got frustrated with our spice cabinet one time. And this was before she really started cooking, but she really just, for some reason, she decided that our spice cabinet needed to be reorganized so that we could find things easier. Well, what she did is she went in to the spice cabinet and she arranged all the spice bottles by height and color. Now, that did absolutely nothing to help us with being able to find spices, but bless her heart, at that age, whatever it was that's what made sense to her because she was creating a pattern. But anyway, in thinking about profit first, in many ways, what we're doing is organizing our finances in a way that makes sense and that makes it easy to be able to know what we have and know kind of the financial health of our practice, just really at a glance. And I'm really grateful to Mike Michalowicz for. As I said, he was on 2 earlier podcasts that we had. I forget exactly which ones, but anyway, we'll put that in the show notes. But anyway, the whole premise behind Profit First is that all the money that you receive, every bit of revenue that you bring in is allocated based on a percentage. And ideally, what you want to do is have your percentage of your money off the top that goes to what you've designated as profit. And second to that, as I mentioned earlier, is what you allocate to pay yourself. Because as Mike Michalowicz puts it, in the book, he says you are your number one employee, and so you need to pay yourself well, and that is very true, especially for those of us that might be in a group practice or where we're in a practice. Certainly, we need to pay our people well and pay a fair wage and pay what they're worth. Anyway, a lot of times we neglect ourselves around that. The other places that we allocate money to, of course, are operating expenses. And unfortunately, what happens a lot of times in small businesses and in private practice is that paying the operating expense first is what everybody focuses on because we want to be, good stewards of our money and pay the bills that we owe and that sort of thing. But the other part of that is that one of the things that we need to look at and tweak is to try to keep our operating expenses at a low level. Certainly, without going off on a tangent, there are times when we need to invest in things that are going to give us a good return on our investment, and that's a whole other concept. But our operating costs, if we can look at ways to kind of keep those at a minimum, not a minimum in the way of being stingy or chintzy with our operating expenses, but something that's realistic and also a bit frugal, if you will. And Mike, in his book Profit First, mentions that this thing called the Parkinson's effect. In other words, it's not talking about the Parkinson's disease, but the Parkinson's effect essentially says that people will spend the resources they have. and I know I've done this in the past. I can think of a lot of times, I'll look at my bank account and I think, oh, I've got a lot of money there. I'm going to go buy some equipment. I'm going to buy a new computer. And that is the wrong way to think about it. Really, what you need to do is spend based on what obviously you need, and spend based on percentages. So you've got your allocation for your profit, and in Mike's book, he has a guide that he has available, which is just a quick assessment. I'm trying to remember the name of it. Sorry for the rattling of the paper. Oh, it's called the Profit First Instant Assessment. And if you go to his site, profitfirst.com, you'll be able to get a copy of that assessment, and we'll put a link to that in the show notes. But one of the things about that Profit First Instant assessment is Mike gives some examples, and really some examples based on his research around the percentages we should be thinking about for the size of our business. I think for most people in private practice here in the United States, certainly there's all levels, but we tend to fall in under the $250,000 a year in total revenue range. And what Mike suggests in there is that our profit to shoot for. Now, we're not going to be there's not going to be any way that a person, unless they're really frugal with their business, to be in this range right at the get-go, but it's something to kind of a goal to go for. What he talks about is our profit should be at about 5%. He said owner's pay should, and I'm talking about 5% of the total revenue that you bring in. Your profit should be at 5%. Owner's pay should be at around 50%. So in other words, what you compensate yourself for in a business in that range, he says 50%. What you need to be paying towards your taxes is 15%, and then operating expenses are, he puts at 30%. So I don't know, one of the things that's, hopefully I'll be able to get some more data on this, but I know in talking with Casey Compton and a few other people, we're in a Clockwork Book Club together, which is Mike's other book, which is just about running helping your business run itself. But anyway, I don't know that those percentages would be accurate for a service-based business like ours. I think that maybe our operating costs are a little higher than that, depending on what we're paying for rent and for the lease of our buildings and that sort of thing. But because I don't know that our revenue, I hope this makes sense, I don't know that the revenue that most people get could support a 50% compensation and a 30% operating expense. I might be wrong about that, and I'm sure Mike Michalowicz would tell me that as well. But anyway, when you look at that sheet that Mike has, you'll better be able to better understand a little bit about what I'm talking about. But I guess my whole point with this, I'm sorry to ramble so much on that. What you need to do is figure out what you're going to allocate each month or each week to those different percentages. And Mike Michalowicz even goes so far as saying to set up separate bank accounts for those different allocations. So in other words, you'd have a profit banking account, you'd have a tax banking account, you'd have what you would pay yourself in another banking account. Your operating expenses go into what you pay out for your operating expense goes on another banking account, and then on the front end of all of that, you have your revenue banking account. So that's actually 5 different banking accounts that he touts that we need to set up. I think you can do the same thing just using spreadsheets. Mike would not agree with me on that, but anyway, I think you can do it on paper so that you know what's going on. For my own practice, I have one main banking account that I use, and that's where all the money comes into, and I pay everything out of that. Now, I do have a separate banking account that I use for my profit and my taxes, and also to have a buffer for my practice. I've got it's a money market account that's gets a little bit of interest on it, but I use that account as really kind of my holding account. I've got at least 6 months revenue, the equivalent of 6 months revenue saved up in there. So if I get a slow month or need to take a vacation, I can draw down for that. But also I put my money in there for my income taxes and also profit. So that's an important piece there. And we haven't really talked about taxes yet. So let's talk about that a little bit. So taxes, as you heard in the previous podcast I did with Billy Robinson, who is a CPA, one of the big problems that people get into in small business is they are not aware of how self-employment tax is different than regular being employed tax is. For those of us that are self-employed, we have to pay a higher rate, and it's around, depending on your tax bracket, but it's around 18 to 20% income tax to the IRS, and we're supposed to be paying that quarterly to them, and that's based on our net income after expenses. So it's tax accounting is a whole separate category, and I'm not going to try to go into that here. But anyway, you need to be making sure that you're setting aside money every month or every week to hold for your taxes. And you should be paying your self-employment tax quarterly. And again, I would say talk to an accountant, talk to an expert in that in your area so that you're getting correct information about that. But so many times people get themselves in trouble because they haven't paid their taxes throughout the year, and they get to the end of the year and they've got this huge tax bill and they don't have the money for it. And it's a heartbreaking place to see people in when they're not prepared for that. So, I'm not trying to be too much of an alarmist here, but do have that on your radar screen as you think about your what you're paying yourself and also what you're setting aside from your practice to take care of things. The other thing I'll just mention real quickly about taxes, the main reason why self-employment taxes are higher is that if you're employed someplace, your employer pays a portion of your taxes. They split with you your Medicare payment and your Social Security payment. They pay half of that. So when you become self-employed, you pay the full amount, whatever the rate is that depending on your tax bracket. So keep that information in mind as you think about your financial side. The other thing I'll say about keeping a reserve, as I mentioned, one mistake that a lot of people make, and particularly when they're thinking about moving from maybe part-time private practice to full-time private practice, a typical scenario for most people, and this was what it was like for me when I went into private practice, is I started out seeing people kind of as a side hustle, had started a private practice and was seeing people on in evenings and on weekends. And so I was really doing that part-time in addition to my full-time job. Eventually, I was able to transition to where I had a half-time job. I worked as a coordinator for Episcopal Appalachian Ministries, and so they paid me a stipend for that particular job, but it was just a half-time job. I mean, I was not getting like a full, the equivalent of a full salary. So, but I was able to do that and use that money to just kind of live on while I built my practice. But what I did is when I made the decision to leave that particular job, to leave the Episcopal Appalachian Ministries job, I made the decision like a year in advance. And what I did over the next year was I took pretty much all of what I was making profit-wise and put it into a savings, a money market account to have squirreled away, as they say, for when I went into full-time private practice. So I had 6 months revenue saved away so that I knew that if I hit a slow month or slow week or slow couple of months, I was covered. I could still keep my office open, still keep the lights on, still pay all of my bills, even if I didn't have the clients to keep the cash flow going. So that would be one thing that I recommend to anyone that is starting into private practice is not only give yourself a profit, but also give yourself a reserve out of what you bring in, so that you're covering yourself for those rainy days, and also when you go into full-time private practice, being able to pay for taking a vacation time and being able to do all of that. So hopefully this has been helpful information for you. I know I could spend a lot of time talking about all of these things, and hopefully this has been helpful for you. Do take a look at the website and go over to practiceoftherapy.com/finance course and go in and take that survey that I've got there. Also, I'll have in the show notes a link to where you can get this download that I'm finishing up today and tomorrow. That's going to be a PDF that kind of walks you through this financial analysis of your private practice and giving you a way to kind of look at it and understand your numbers. One of the things that I hear people hear from me all the time, and I know I hear it from others in this whole consulting space, is the importance of knowing your numbers, knowing what your cash flow is, knowing where your money is coming in and where it's going, and also knowing things like what does it cost you per session, what are your operating costs. So being able to have a way to get your head around that. So this guide will kind of get you started with that. The whole financial course that I'm putting together, hopefully we'll have it out before the end of the year, but there's so much work I'm putting into it. And but hopefully I will commend that to you. So hopefully, again, this has been great information for you, and look forward to hearing from you. Well, folks, thanks again for joining me today. I hope this episode has been helpful for you and giving you a few things to think about around the whole financial piece of running a private practice. As I mentioned at the end of that last segment, I am putting together this financial course, and I'm really trying to figure out the name for it. So shoot me an email if you've got a clever name you'd like to see. I probably, I think what I'll do is have a contest and maybe give some sort of prize for the naming of the course. So anyway, if you got some ideas about that, let me know. Hope to have that out probably towards the before the end of the year, hopefully. Although, as I mentioned, I've got a lot of work to do on it. So, but anyway, thanks for joining me today, and do head over and subscribe to the podcast wherever you might be listening to it. Also, go over to the website, practiceoftherapy.com, and go into the cool resources button and check out the things that I've got there already. I put several things together. One thing that I'll put together just along the financial side, I do have, for those of you that are just starting out in private practice and want a way to begin to track your money, I put together some accounting templates that you can use with Google Sheets. And I think they're pretty reasonably priced. I think they're around I better not say because I'll say it wrong. But anyway, they're reasonably priced, and it's a good way to get started with tracking your private practice and tracking the financial side of things. I know there's like a check register, a savings register. There's also an expense ledger in there, so you can track your expenses, and a few other little things in there that I think you'll find helpful. Yeah, so to get to that, just go to practiceoftherapy.com, and you'll see a button right there near the top that says Cool Resources, and I've got all those things there. So take care, folks. I'm glad you joined me today. As I mentioned earlier, do go over and subscribe to the podcast wherever you might be listening to it. And also give us a rating and leave a review. I love getting reviews from people. I love getting honest feedback. Had some great reviews from folks, and so I'm glad they've taken the time to do that. I do appreciate it. So take care, folks, and we'll be talking with you later. You have been listening to the Practice of Therapy podcast with Gordon Brewer. Please visit us at practiceoftherapy.com for more information, resources, and tools to help you in starting, building, and growing your private practice. If you haven't already, please sign up to receive the free Private Practice Startup Guide at practiceoftherapy.com. The information in this podcast is intended to be accurate and authoritative concerning the subject matter covered. It is given with the understanding that neither the host, guests, or producers are rendering legal, accounting, or clinical advice. If you need a professional, you should find the right person for that.